Hello and welcome back to the Real Estate Roundup podcast. My name is Kobe Zinn and I'm your host, and I'm joined here today by my co-hosts Tony Flores and Andres Martinez, both very active in the real estate market as real estate agent and investor and real estate sales rep for new home builders in the San Antonio, Texas market. How are you guys doing today?
Awesome.
Awesome.
Awesome. How about you?
I'm doing good. I think we got a lot of energy today on this podcast. It didn't start out this way when we first started this conversation, but I think it eventually rolled into a lot of high energy because we're very excited, and I think it's going to be a theme of today's episode as well, which is really talking about the realities of this real estate market that we're in. I think a lot of people, when they think of the real estate market today, there's not a lot of high energy. People are not excited about it, but there are ways that you can be excited in this real estate market, whether if you're an agent, a seller, or a buyer. So I'm very excited to dig in today. So first off, let's just get an update on kind of what you guys are seeing in the market right now. What are some of the trends you're seeing, and what are some of the questions you guys are getting and problems you're getting from the clients you're working with? So Tony, we'll start off with you. What are some of the trends that you're seeing right now in this market here in 2024?
Yeah. So in our market, at the end of the day, it's really kind of changing over to a buyer's market where there's more homes on in inventory right now than there was, even 6 months ago, 12 months ago. So people are able to be more selective. They're able to take a little bit more time. They're not feeling necessarily rushed or pressured into, have to absolutely, make an offer on this house, or otherwise it's going to be gone, in the next, 2 or 3 days, that kind of stuff. And so, yeah, people can be more selective, as a buyer, and as I know on the selling side, there's always going to be buyers and there's always going to be sellers. So, that just means that we want to present your property in its best light, have the um, best way to market it. And consulting with the professional realtor, of course, is a great step in that. So yeah, so that's kind of what's happening. The interest rates have definitely affected people that are, would like to move versus those kind of people that would like to move. Then they kind of start learning more about the interest rates and how that affects their payments. Then they might be pulling back a little bit. But if they have to move, essentially those buyers, of course, are still out there.
So there's people in the market regardless, right? Because there's people that absolutely have to move, and then there's ones that are considering it, whether they like to move or get into a new home or buy a home. And we'll talk a little bit more about that of what are some of your advice on that, and how should people be considering those options as well. But the same thing for you, Andres. You're in the market as well as a new home sales rep, and obviously you're a real estate agent as well. So what are some of the things that you're seeing right now in this market that as far as some of the trends, and what are some of the things that you're hearing from the clients that you're working with?
So what I'm seeing is realtors are not as many realtors, but the realtors that are very successful at the moment. They're out creating content. They're out networking. They're building those bridges. So one thing that we have to realize is people might have a necessity to move. We live in Military City, USA, which is here in San Antonio, and people are going to PCS to a new duty station. And usually it's between April and September every year, but people all across the world that serve in our military will get a new duty station. So there's still a need for people to move. People just don't move because it's their first home, or but sometimes your job might relocate you. So there's a need there. And you got to attract that type of buyer at the moment. As far as the impulsive buyer, we're starting to see less and less of that. So guys, got to get out, market yourself, and just be very proactive. You got to be forthcoming with giving information and providing them solutions, because all they're hearing in the news is negative information. And After that, the next time someone says something about purchasing a home, people just do not want to hear it, or they kind of starting to dread it. What a realtor can provide that information to future clients. Hey guys, there's a 5.49 fixed rate, and they're able to give you some closing costs. This is available in this community. At that point, when somebody was, hey, I'm not buying a home, you know what? A 5.49 is something that'll make it affordable for me to make the transition, and then they're able to move forward with the home, or with starting to search for a home.
Yeah. So, there's a lot of information right out there, and it's not necessarily positive. I would think so. But you mentioned that one of the ways that you guys are able to work with clients as real estate professionals is providing them with the right information, right? Providing them with information that isn't necessarily just going to say, "Hey, this is the way it is, and there's nothing we can do about it." It's more so, "Here's what we can do about this situation," right? So, what does it look like? What is the information that you guys are providing as professionals to your clients to actually help them, resolve some of the issues like higher interest rates and, you know, not necessarily being as affordable as it used to be a couple years ago to actually get into a home. So we'll go with start with you, Andres, on this one, and then we'll ask your opinion on this, Tony.
So one thing that I've been really polishing up on is just explaining the difference between a 2-1 buy down and just a fixed rate buy down. Uh, what they benefit from, because sometimes you're able to get a 2-1 buy down, and this is just a hypothetical scenario. Let's just say we could get you at 3.5 year one, and then uh, year two 4.5, and then from 3 to 30 uh, 5.5 interest rate. So yes, that interest rate is going, but it is a fix from 3 to 30, and you have to get qualified on the 5.5, but it gives you an adjustment period for you to move into a house. um, what people need to understand is when somebody offers you a buy down, and this is traditionally going to be with the builder, that builder or those mortgage companies, they have to buy into that specific rate buy down. There is a cost for that. So being able to communicate that to clients is very, very important. Second, what if you get a fixed rate buy down of a 5.5? Because this is where we're going to be from years 3 to 30. Are we able to um, budget for this specific payment? And does this payment work for me at a 5.5? Okay. If that works for you, I have good news for you. We can give you closing costs to a specified amount. Sometimes we could cover it all. Sometimes it's a huge portion of it, right? And then just letting them know, like, hey, some clients will come, they'll be pretty persistent. Hey, I want down payment assistance. Educate them. All right. Explain the different down payment assistance programs, and just let them know that there's a possibility that that interest rate might be higher. That payment, just going over payments, educating them on the difference of each one and the payments, the estimated monthly payment, that clarifies a lot. So it's not you having to convince them. You provide them the information, they're going to make a decision that's tailored to their lifestyle and what's going to work for them. And that's what we're able to do, is just provide information, and just reiterate that it's something that has to work for them.
Right. So that's one of the big things that a real estate agent is able to do is provide all these different types of solutions, and then for whatever works best for the client, then they're able to go ahead and go in that direction as well. So you mentioned, buy downs is one of the big pieces of information you're providing to clients, right? Especially with the way interest rates are today. What about you, Tony? What are some information that you're providing for clients in order to help them navigate this market a little bit more and actually give them potential options when it comes to affording a home in this market?
Okay, so I think so. Andres made some really great points. So a couple of points was that a 2-1 rate buy down. So the qualification will be what the end of that what that interest rate will be at the full term of that cycle, right? If it's a 3.5 first year, 4.5 second year, 5.5 the third year, you're qualifying on that 5.5% interest rate. So which means that based on your based on your current monthly income, based on what your current monthly expenses are, that is what you're qualifying for. So here's what you got to watch out for. What happens? So after you get that, after you get the 2-1 rate buy down, now you want to, okay, so now I want to, hey, let's buy some new furniture. Okay, well, you're going to get it. You're going to get your credit uh, checked and pulled, and they're going to say, okay, well, based on what your current payments are, you can afford this furniture. Well, what if, now a year later, now you want to buy a car, and now your car payment's going to go from, going to jump up maybe $200 a month. So what am I saying? You've got to watch out for those added expenses that are now you've qualified for that 5.5. So now when those rate changes happen at the 12-month mark and the 24-month mark, now is that payment still affordable for you, that the 5.5% interest rate, because you've made some other changes. Now if your income went up and other expenses went down, now it's probably still relatively affordable. But those are some of the things that you got to watch out for, and you don't want to be, have this amnesia, kind of this financial amnesia, because you've already got your payments lower. It's lower in order for you kind of just to kind of stair step. Now, the purpose really of a 2-1 or these rate buy downs, these temporary buy downs, is to project that, what if the interest rates do come back down, then you can refinance. And that's kind of like what the ideal scenario is. It goes from 3.5 to 4.5 maybe, and then by the time you're on the 24-month mark, maybe the interest rates have come down. But if they don't come down, now you have possibly made that house payment unaffordable. So that's one of the things that's just what we call like a watch out, and remember how your payments are going to increase. Of course, a lot of people are experiences increases of home insurance, car insurance. Those things have gone up quite a bit. A lot of it's because material costs have gone up, labor costs have gone up. So again, these are some of the things that we're trying to. It's not part of the real estate transaction, but it's like, hey, we've got to keep that in mind. You got to remember that part, because those are super, super important. Because what you don't want to end up is saying, now this house is unaffordable and I've only been here a year or 2 years, and now where am I at? I don't have equity. If I sell now, I'm going to be in a position where I'm going to lose money, or I can't sell for what my balance is, because the market hasn't improved and things like that. So those are the kind of concerning things that we want to make sure we let people know about. Right now in our county, in Bexar County, they're showing about over 300 foreclosures, most of them being mortgage foreclosures. So there's multiple types of foreclosures that can happen. A lot of them are, and that doesn't mean that's over 300 are going to actually foreclose. That means that they're at risk of being foreclosed upon in this area. And this is just the metro, San Antonio area, metro area, over 300, I think 309. So, we see people that are in positions, unfortunately, where they have zero or negative equity. And that means it's probably more common with cars, but in houses, you don't want to be in negative equity position, because it makes things tight. You don't want to, if you're already behind on certain things, do you have extra money to pay at closing? No, but there are other potential scenarios for that. And that's one thing as being an investor, we can get more creative and we can get more creative and think outside the box on some of those things like that.
Yeah.
Bless you.
Yeah. Are you okay, Andres, by the way?
Yes, I am.
Okay. Yeah, just want to make sure. And if you guys you guys don't know, so we're recording this the day after the 4th of July, so that's why Tony's got the festive jersey on and everything. But yeah, so you mentioned a little bit about getting getting your home, but not just getting it, but also being able to stay in it, right? You don't want to get foreclosed on a year or 2 years later. And,
Right.
it's obviously not the exact same situation as 2008, 2009, but, you can see a lot of similarities there, right? Where people are getting into homes and getting into, these leveraged positions where they can't necessarily maintain for a long period of time. And then we all know kind of what happened there, right? And we don't want that to happen again, right? For
Yeah.
people that are kind of borrowing today and getting into homes today. So, one of the other things I think was really interesting, we were talking a little bit about before the show, are just some scenarios, right? Some examples of, ways that you guys are working with clients and potential clients that are out there who are either buyers or sellers to essentially get them a creative way to put the deal together, right? Because when homes are not affordable, it's not just the buyers who are suffering, but also the sellers as well, because they're not able to sell their properties, right? Because nobody can afford it. So, love to hear some of the, some of the scenarios you guys are running into, and maybe, what are some of the creative ways that you guys are able to actually help not just a buyer get into a home, but also a seller of a home, actually sell their home and move on and recoup their equity, or at just very least stop bleeding money as well. So we'll go start with you on this, Tony, and then we will go to you, Andres.
So yeah, when people have negative equity and they have to move, like they don't have a scenario where they, can stay in the house, whether it be a income loss or things like that. What are their options? So a couple of options that I've helped people with are, doing a short sale. So doing a short sale means, what's the, why is it called a short sale? The reason why it's called a short sale is because the bank has or you have a balance with the bank, right? So they have an expectation of course, if you need to sell the house, then they're going to get paid off completely. So what if the value of the house is, or what the sold price on the house is 300,000, and it could only be sold in the mortgage balance is 310,000, or something in that case. So you would be paying that you would have to pay off $10,000 plus the closing costs and things like that. So, and this could be even higher. What if the balance is much more? What if the payments are behind? What if the payments are behind 14,000? Then it can be sold at 300,000, the $10,000 balance. So it could be 24,000. So the shortage would be like, the shortage is the bank gets shorted money from what they would be closing at, what you could be selling at versus what what they would be receiving at closing. That's why it's called a short sale. Short sale is somewhat complicated. There's a lot of moving parts to it. Right now, I'm part of 3 transactions that are currently under short sale. So, what they do is the banks will send appraiser out to the property. They will do an assessment and they will say, we believe this is the market value on this property. That's based on the market data. That's based on the days of supply, and it's based on the condition of the house. So the banks will want to get, of course, as much money as they can for the short sale. And what the one of the good things about a short sale is it does not negatively affect your credit once a short sale is completed. All right. The only thing that's affecting your credit potentially in this scenario is if you're not making the payments or you're behind on the payments. That will ding your credit, of course, month after month after month until until the house is sold and the bank is satisfied. So a short sale would bring a buyer with the short sale will bring a buyer to the table. An agent or somebody will bring a buyer to the table, and they will buy that house and lower than what the what typically what the bank is going to agree to. or the bank will have to agree to that sales price, and what they're looking for is their net. So the other part, of course, if someone's underwater, is they possibly could go to foreclosure, which is a super bad ding on credit. Of course, and I have asked sellers before, you know, if you have a credit application, what do they ask you? Do they ask you if you have any, bankruptcies? Have you had foreclosures? Things like that. I said, but do you ever see where they say, have you ever had a short sale? And what's the answer? The answer, my experience is no. So short sale is definitely better than a foreclosure. And there's probably one more option. And Andres was bringing up um, a neighbor or someone, probably wasn't a neighbor, but it was somebody that he knew that's had his house on market. And maybe Andres can explain that situation. We can talk about a different scenario as well.
Yeah, for
Yes.
sure. Yeah, so let's just recap that a little bit, and then we'll go to you, Andres, to talk a little bit about that scenario and how, so you guys are working out some math there. But so just to recap, a short sale, right? Basically, the bank's cutting their losses, right? They're just saying we don't want to keep losing money on this, so they would actually take, essentially a lesser amount than what they loaned on, but they would actually just have to agree to it, and it's beneficial for the seller as well because it doesn't really affect their credit. Versus if they do go into foreclosure, that could really affect them down the line as well. So that's a really good point. Now, yeah, okay. So Andres, we were talking about this scenario of this, essentially potential client or somebody out there who is, selling their house, and they're kind of in a weird scenario where it's difficult for them to actually sell it because of the affordability issue.
So one thing, so as a real estate professional, I think people need to be transparent. You have to be honest with the client. They're really they already have some apprehension because of what the information that they listen to every time they turn on the TV, every time they now social media. Before we would say every time they turn on the radio, right? But now there's different podcasts, there's information on YouTube, and they're telling them like, "Hey, this is the worst time to sell a home." Um, and it's because we're going into a more traditional market, right? Homes are uh we have an inventory that's actually growing to 4 to 6 months, right? So homes are staying on the market closer to 4 to 6 months, right? What we need to do as sales professionals is be able to communicate the correct information, set an expectation. Even though I'm in the new build side, right? If someone approaches me and they have to put their home on the market, if we're going to have a contingency, we got to have a realistic expectation, right? And being able, because at some point people are going to put earnest money down, and people could forfeit these funds. So just educating them on what can happen, right? And you give them every scenario. You don't just give them the nice or the fun stuff. You got to give them the realistic. Hey, in a perfect market, we might be able to get it sold in 90 to 120 days. We are seeing um, homes staying on the market closer to 6 months. You provide that information, but different realtors have different outcomes, right? There's some realtors that do a great job. They're able to market, they're able to price the property correctly. They have these hard conversations up front so that home could be priced as competitive as possible where people can find it as a good buy. Being able to explain them on how they can contribute and give concessions to the buyer. How can we make this house out of, let's just say, 2,000 houses available? How can we make it attractive? How can someone fall in love with our house? Obviously, if there's multiple houses that are pretty similar, what's going to set one apart? So a realtor being able to have these conversations and set uh, um, a real expectation, and then um, a realtor is not able to tell you what you should list your house at. They give you a range. If that realtor is like, hey, in a perfect market, right, this would be the price. In a slower market, this would be the price. And then at a traditional market, we might be here in the middle. And then he should be able to educate you on the state of the market and give you the information on how the market is reacting to listings in the area. And he provides you that information. And there, your client should be able to make the best decision as far as pricing, right? You give them the range, you let them know the temperature of the market, and then they make a decision on where to price it. What I think is sometimes when someone really wants to get a listing, they want to deliver all good information, right? Um, if when you deliver the correct information and you take the emotions out, you're possibly going to have a better outcome. The reason is you don't want a house to stay on the market 3, 4, 5, 6 months, um, because the longer that house is in the market, at some point people will start thinking, "What's wrong with the house? Why hasn't somebody purchased that home?" Um, and that's not a good. That's not good for the seller. You want to make sure you price it right. You give them the correct information. Um, you might not start the conversation with incentives, but let's say a buyer comes, hey, I'm going to need a little help on closing costs, or I'm going to need a little help. Well, they're not able to help you in closing costs. I'm going to need a little bit of help buying down the rate. So the biggest reason right now why people are not able to purchase a home is affordability. And sometimes the seller can help buy down that rate. So and just trying to make it affordable, which is not the seller's job, but we're in the market where this is something that people are highly considering is that interest rate.
Yeah. Yep, exactly. So it's not just about, kind of putting out that good information, right? Putting out, information that might make people feel good, but it's about getting information on, if you really need to sell or buy, what are some of the things that you can do, right? Is it creative financing? Is it seller financing, right? There's different things that people can do, and we don't, want to go too much into detail here, but because there are longer conversations and more in detail. So if you guys are interested in learning a little bit more about how you, we can help you with that, make sure to look in the description down below and reach out to either Tony or Andres, and they will be able to help you out with, much more in-depth conversation like we were talking about here on this podcast, right? Because everybody has a different scenario, and you might have a better scenario in front of you that you're just not privy to yet, and you want to get that information. So yeah, so I think we covered a lot today on the show. I think it's very valuable for people in the market. I hope it sparked a little bit more enthusiasm for people, and instead of just the doom and gloom they're kind of hearing out there on the news, or on the internet, or even on the radio, right? If they're still listening to local radio shows or anything like that. But as we kind of wrap up today, was there any last pieces of advice, anything you guys will want to kind of leave with the audience here, as far as just moving into the rest of the summer year, and the rest of the year for this real estate market? And we'll start with you, Tony, and we'll wrap it up with you, Andres.
I think the main thing is if you're somebody that's considering selling, there's creative ways to offer the potential buyers, a more affordable home, and there's different ways to do that. So make sure you talk to your agent about how to do that, how to put your best foot forward, and try to get offers, of course, within the first 2 weeks. That's always very, very good for you, because if it stays longer, then it doesn't look so good. As a buyer, representing the buyers, what I would recommend to them is I would look at what their needs are, of course, and also see what their affordability is. If they need down payment assistance, can help them with down payment assistance programs, navigate those types of things. And also, if it's a resale house, I can work with other agents as far as making it more affordable as well. So we try to get the best case scenario and make everything, of course, agreeable to all parties, and work with them on that. So I'd love to
Yeah.
be able to help.
Awesome. Awesome. And same question to you, Andres. As we kind of wrap up here, is there any, I guess, last advice you would give to people that could help them navigate this market a little bit better as we kind of wrap up the second half of 2024?
So my recommendation would be make sure you get with a real estate professional that is willing to have those hard conversations with you, that is ready to set a realistic expectation, um, because the more education you're going to get as far as interest rates, being able to price your home, information and updates about how the market, because the market fluctuates, right? Interest rates fluctuate. So whoever's going to be willing to do the work, keep you posted, keep you updated, and provide you with as much information to help navigate that transaction, uh, I think you need to align yourself with the best real estate professional that can meet those specific requirements, because we're in the business of selling homes and we want to make sure we deliver dreams, and we always want to deliver good news. But a lot of that good news is if we set a realistic expectation and if we are able to meet our goals and sometimes even meet a better expectation than our goals, then at that point, everyone is happy in the transaction. And then it alleviates a lot of worries in this stressful climate, right? The economic climate is not the best for some people. We're here to give you information to ease your mind.
Very well said. Very well said, Andres and Tony. And appreciate you guys. Appreciate you guys as always offering the information and the insights you guys have, for real estate and in this market right now, especially with all the stress going on. So make sure you guys, if you want some more advice, more tailored advice, reach out to either Andres or Tony in the description in the show notes down below. But other than that, appreciate you guys tuning in to the Real Estate Roundup, and we'll see you in the next episode.